Welcome to the E3 Live Market Report. I'm Pat McClatchy with the Ag Market Network. Looking at the markets overnight, the agricultural markets are mostly lower, a little bit lower. Looking at a breakdown on that, cotton market at the moment is down about 2 points. We've got soybeans down 2.5, corn down 0.5 cent, and wheat is up about 2 cents. Looking at the financial markets, we've got the dollar down 34, but we're kind of mixed. Typically, the dollar is down and then other markets are up, so we're not really following that. Crude oil's down $1.22, and the gold market is right now up about $4.40 an ounce. So we'll be coming out here in less than a minute with our export sales report. We'll get to that as it comes out. Looking at last week, we had a good number in cotton at 47,000 bales, considering how tight the market is. Soybeans were a negative number last month. Corn at 639,000 and wheat at 319,000 were all respectable numbers. So we're looking to see if we can get an improvement on that soybean number, and also to see if the cotton market can maintain at that level. Looking at the numbers as they've just come out, the cotton market is actually a negative number. We had cancellations, a negative 21,800. Going next to the soybean market, 319,600, so that's a much improved number from last week. The corn number at 588,200. I think that number's not that bad a number. And we've got the wheat at 47,900. See, new crop wheat's 112,000. So the reaction of the markets, the cotton market is selling off some. It was down 3, right now it's down 7 to 8. A little bit of a disappointment. The soybean market was down 2 just before the number came out, and the soybean right now market is down 1. The corn market at the time the number came out was down 1, and looking at that right now, that market is unchanged. The wheat market was up 2.5, and looking at the wheat market is up about 1 3/4 pennies. So not a lot of change there. Let's look at the breakdown for these markets, starting with cotton. The negative number of 21,800. We will break down those that did buy cotton. Vietnam took 11,200. Indonesia took 4,300. Thailand took 3,200. China canceled 45,200. So that was the main cancellation. The actual shipments were 201,500. That's down 54% from the previous week. That last week's number was a record for the year. So that's the cotton market, and as we're speaking, the cotton is starting to sell off more. Right now, July cotton is down about 27 points. Let's now go to soybeans. That soybean number of 319,600, up noticeably from the previous week. Germany took 96,000 metric tons. Netherlands took 85,000 metric tons. South Korea took 26,300 metric tons. Also, new crop sales of 226,200, and China, of that new crop sale, took 165,000. Reaction of the bean market since that time: soybeans are unchanged. Soybeans were down 2, so positive reaction so far. To the report now, let's go to corn. 588,200. down 8% from the previous week, but up 19% over the 4-week average. Increases were reported for Japan at 194,300. South Korea took 166,000. China took 65,200. And the reaction of that market, we were down a penny. Now we're still down. Well, we're down about a half cent. Lastly, going to wheat, the sales number of 47,900 has to be a disappointing number. It's a marketing year low, down 85% from the previous week and down 80% from the 4-week average. Egypt took 57,800. Ecuador took 20,700. And Peru took 11,200. Then we had cancellations from various countries, unknown destinations primarily. And the reaction there, wheat was up 2.5, and right now wheat's up about a penny and a half. So not a lot of reaction. I guess most of the negative reaction would be in the cotton market. Looking at just making some general comments about the market, and then we'll look at what's happened over the last week. You know, for quite some time, as the dollar went, so did the commodity markets. But over the last few weeks, the dollar has been up and down. It's just been sideways. And as that market has stabilized, we've seen different commodity markets trending higher. We've seen the crude oil trending higher. We've seen gold trending higher. We've seen the cotton market trending higher. The grain market has struggled some, but we've seen some relief coming as the dollar has stabilized. And looking over the last week, and we'll start with soybeans. The news has been, well, let's just start it with the market's done. Oh, since Monday, the market has rallied about 13 cents. Some of the news, Reuters story came out saying that China will be increasing soybean imports over the next 3 months. That was taken in a very positive way. Also, speculative buying is starting to show up, more bottom picking, I think, than anything else. And the technicals have been negative, but they seem to be trying to turn a little bit positive. The seasonals are at a time of the year when we usually are approaching a top. Can't be real precise. It's just in the time period of April to May, we usually are finding a top in the market seasonally. Doesn't always have to follow the seasonals, but that has been the pattern. Target for beans, old crop, $9.95 to $10, and right now old crop is at right at $9.70. New crop beans, target of $9.80. Right now, November soybeans are at $9.55. Now let's go to corn, and then we'll talk about wheat. Over the last week, since Monday, the corn market's down about 5 cents. The planting, some of the news, planting has been slow due to weather, wet weather. There's plenty of moisture. We'll get the crop planted, but it's a little late right now. We also have been talking about good ethanol margins. Most of those things have been positive for the market. Seasonals like soybeans are at a time now when they tend to be topping in the market. Targets for corn, we old crop $4. Right now, old crop corn is at $3.76. New crop $4.15 to $4.20, and right now December corn is at $4.50. Going to wheat. Some of the news influencing that, always this influenced by corn and also soybeans and the outside markets. In addition to that, outside markets have improved and weather patterns seem to be shifting more toward a normal pattern. Over the last week, we've seen the wheat market since Monday down about 35 cents. And now let's talk about the cotton market. Over the last week, cotton market has retreated and has sold off about 151 points since Monday. We had a good run up until then. Most of the news has been pretty positive for cotton. Continued good demand and a tightening market. The threat of a squeeze in May. Very positive technical picture for cotton, holding above the 200-day moving average, which it did, I think, about 2 days ago. It had retreated back to that level, touched it, and then reversed. That's all very positive market action. I will say this about new crop cotton. Very good range in West Texas, soaking rains I haven't seen possibly in a couple of years. Does a lot toward the dryland cotton and helping it get off to a good start. So it could be that the new crop cotton could struggle somewhat. Looking at targets, well, let me just say seasonals are up, but are close to a time period here in the spring to early summer where we find a top. Targets for old crop, 67 to 68 cents. We've gotten up into that level about a week ago and retreated. We could see that again. There's even a chance we could test 70 to 72 if we do start seeing more of a threat of a squeeze. New crop cotton, as I said, we've lowered our target on that to 68, possibly to 70 cents by early summer. Let me just make this comment about cotton. Well, I'll tell you, we'll get into the comment as we get a little bit further. I do want to read this to you. It's a comment about El Nino. It came out over the next week. It came from the Climate Prediction Center, and it's a comment, and it's just, I'll just read the synopsis. There's approximately a 70% chance that El Nino will continue through the Northern Hemisphere summer in 2015, and a greater than a 60% chance that it will last through the fall. So what does that mean? It typically means wet in the U.S., especially in the southeast, the southern part of the country, which can be good certainly for crops, but in cotton, if we turn out to have an unusually wet fall, it can definitely affect the quality, which we don't need to see happen. Another thing I want to read here, and it'll touch on the point I was making, or going to make just a minute ago. It comes from the Plexus Cotton newsletter that Peter Igley writes, and we often quote from it. He makes some excellent points, and I've just gone through and highlighted some things, and I'll just read those. Current crop futures rallied on the highest level since, and this was last week, since last September after technical buy signals invited new spec buying. When there is a lack of deliverable grades, shorts won't be able to offset their positions with cotton or even threaten to do so by increasing the certified stock. Although the certified stock has gone up to 37,000 bales as of last week, it still only represents 370 futures contracts, which pales in comparison to the 268,000 bales or 2,680 contracts we had in place a year ago. This means that the shorts will likely be forced to either buy out or roll out of their position. However, when new spec longs are rushing into the market because the chart inspires them to do so, there needs to be someone on the other side willing to go short. But with the trade already shorter than it needs to be at this point, and with speculators typically not interested in betting against the prevailing trend, the market is compelled to move higher in search of potential sellers. The comment then is, so where do we go from here? The market's latest up move has been impressive, but it occurred in rising volume with open interest, which tells us that it's not simply some short covering, but that new bets are being placed. Open interest has gone up about 15,000 contracts over the last 4 sessions by 195,000 contracts overall, even though the May contract is in its liquidation phase. With longs and shorts both digging in, it will be interesting to see who ultimately keeps the upper hand. What speaks against the shorts is that they don't have the intimidation factor this time around, i.e. a large certified stocks with which to frighten the longs. If momentum stalls, we may see a pullback towards the 63 to 64 cent level where the trade would likely support the market. On the other hand, if trade shorts get cold feet and start covering, the market might challenge the 70 cent level. While we have no firm opinion on May's next move, we feel that the new crop is starting to run into strong resistance from grower hedging. and will find it difficult to advance any further moves from here. And I just wanted to raise up those points from Plexus and just bring that out in the market. Let's review the market quickly before we close. The cotton market right now has sold off more. We are in the July cotton down 36 at 64.64. December cotton is down about 25 at 64.80. Soybeans are up a half cent at 968 and a half. The corn market in July is up a half at 383 and a half, and the wheat market is up 2.5. So that concludes our meeting for today. Thanks for joining us. Hope you'll be with us next week for the E3 Live Market Report. Thanks.